What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to do some in-depth technical analysis and break down what the heck is going on with Tesla's share price and why on earth tomorrow is going to be a very important day for the market. I'm going to break down the PCE report that's coming out, what's happening right now with the stock market, what the data is telling us, and how all of this may affect Tesla's share price for tomorrow and beyond. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 4 days, so check it out before they run out. With that out of the way, let's get on with the video. Tesla's up over 10% for the day, pushing up pretty hard. And I did make a video previously where I mentioned that Tesla would see a short squeeze, and that's what's going on right now. We actually saw a lot of people buying into puts. We saw a lot of Wall Street just shorting Tesla pretty hard right before earnings. And Tesla did surprise with a very, very strong report. Even I wasn't sure if Tesla would be able to break and beat EPS, and they ended up doing that. That's because of the fact that there were all these price cuts and things like that. But Tesla did very well, right? It's pushing up, it's very strong, and the EV sector is pushing up. The market looks very optimistic now, and the market is continuing to pump. Now, I want to break down the data that came out today and also why on earth, yes, the market's pumping. Maybe the market may pump up more, but there is still a big possibility that this move to the upside is a trap and the market could still reverse. I know that sounds crazy. I know a lot of you may not believe it, but when you see the charts, when you see some data, it's going to actually suggest that is very possible. So to start us off, let's talk about Tesla. I already made a video about their earnings. If you want more data about it, you could look at my video from yesterday. It was very, very packed in there. I managed to fit everything in just about 20 minutes, and there was a lot of information we went over. But basically, Tesla did a lot better than expected. They beat on earnings per share and revenue, and the share price is popping. It's starting to squeeze, and lots of other EVs are following amidst the very positive remarks made by Elon Musk. Now, Elon Musk also said something. He did not say that Tesla will just explode forever in terms of its share price. He said that he believes the short term for Tesla is unpredictable. Still, that's because of the potential recession. He mentioned that if the market starts coming down, even if Tesla is doing very well, even Tesla could take a bit of a hit. But he said, do not worry, do not fear. For the long term, for years to come, he believes Tesla is going to become the most valuable company on the planet in history, and I agree with him in that case. But I just want to note that for the time being, Tesla is popping. We're doing very, very well, and we may continue to pop, but there are some warnings I'm going to talk about a little bit later. So, huge congratulations to Tesla as well and the team. They did very well amidst all of the price cuts, the lockdowns, and all the challenges. So I'm very proud of the company, and I do believe we have more beats to come. But as great as Tesla is, it is still subjected to make changes, and the share price could still be affected by the overall economy and other factors. That's why it is important to go over some of this data. We have PCE data coming out. This is one of the major inflationary measures by the Fed. If this is higher than expected, this could be a negative thing for the stock market. If it's lower than expected, it's likely going to help the market continue maybe to pump a little bit, but things could still change because the last time this came out was in December. And what happened was it was lower than expected, right? Inflation was lower than expected during that time. And yet the market, it kind of popped and then it ended up actually dropping kind of hard after that. So sometimes unexpected things could happen in the market, and that's why it's very important to be prepared. I'm bringing this up because we also have the FOMC meeting on February 1st. This is where Jerome Powell is going to be speaking. And if anything, the odds do favor him being more hawkish than what the market is thinking. This rally we are seeing is known as the Fed is bluffing rally. The market thinks that the Fed is exaggerating. They think inflation is crashing down. Everything is going to be fine. The Fed is not going to even raise rates to the same extent that they said. The market is thinking that the Fed is going to stop raising rates at 5%. And that's it. But the Fed speakers, such as Bullard, I think I heard Brainerd say this too, they mentioned that they're going to plan on raising rates above 5%. So that's something you have to keep in mind. You have to be very, very careful. The market's expecting a 25 basis point rate hike for this meeting. We'll have to wait and see. But you have to be, conscious of how the Fed performs. The Fed still wants pain in the markets because there is still likely a recession to come. The data for GDP that came out today suggested that the economy is still relatively strong. Jobless claims are still lower than what we want them to be, meaning the jobs market is strong. The GDP is strong, right? Our GDP growth is still better than what we wanted it to be. The market's popping off this, thinking, oh, we're going to avoid a recession. Oh, it's going to be okay. The Fed is not going to be as hawkish. And that's why I'm still very, very cautious. Because when everyone turns too bullish, the opposite could end up happening. FX Evolution actually put this on his Twitter. This is very important. We have smart money flow versus dumb money. And it's actually diverged this week like crazy. And look at the charts right here. I'm going to try to open this in the new tab so it's a little bigger. Hopefully it works out. But anyways, this is very, very important, okay? Because look at this right here. This is the S&P 500. When this thing had these peaks, what you'll notice is that smart money, we start to see this big decrease in the flow, whereas dumb money starts to just, they become way more confident. They get so excited in terms of their confidence inflows, and then the market ends up dumping. See the divergence? Dumb money is going up and up. They're becoming more confident. Smart money is the opposite, right? And this is what happened after the market pumped, and this led to a big drop in the market afterwards. And then something similar happened, I would say, right about here during the second rally we got. I think this was around August time. Check this out. During the August rally, what happened? The confidence of smart money was dropping right here. Their inflows were dropping, whereas retail, dumb money, they're like, oh, the market's about to squeeze. The bear market is over. We're about to go to all time highs. And look at what happened. Another big rug pull. Right? You have to remember the sentiment, the psychology. The market is greedy right now. But look at it right now. What is going on here? It's crazy. Okay? The market's rallying, the market's pushing up pretty hard, right? We're seeing SPY getting closer and closer to the highs we made in December time. And what's happening? Smart money is not falling for it. Smart money is not confident. Just like these previous occurrences. Whereas retail and dumb money, they're bullish. They think the market's going to explode. They think we're going to go to all time highs. They think the Fed is bluffing. You know, just be careful. Correlation does not mean causation, right? Just because there's a previous trend, it does not guarantee that every time this correlation exists, it means that the same trend will continue. What I'm trying to say is there is still a possibility the market could still, break to the upside. There is still a possibility the Fed could be dovish, but right now, statistically, it's unlikely based off this trend. What's more likely to happen is history repeating itself. We get this rally, retail, dumb money gets so excited, and then all of a sudden something happens, and then we get an opposite reaction, right? Smart money is already expecting that. And I also want to bring this up because the market, once again, is thinking the Fed is bluffing. Now, for Tesla, we have 209 million in volume as of right now. I'm actually recording this a few minutes before the market closes. So we're actually doing pretty good on volume, above average. And the short volume percentage is likely going to come down super, super hard. I'm saying this because of the fact that it was very high previously, meaning the shorts that were piling in, they did not just get destroyed, but they're losing control over the stock big time, right? And that's going to likely last, and maybe temporarily, but The only concern I have is look at how Tesla is correlated with the market. Even if Tesla gets these big rallies, when Tesla went to all-time highs, when the market got rug pulled, even Tesla got dragged down. And then right here, SPY comes down. Tesla was holding up. It was showing more relative strength during the first half of 2022. Then they both rallied together. Tesla started dropping, I'm sorry, SPY started dropping a little bit more than Tesla in the beginning. And then all of a sudden, as SPY was recovering, Tesla started dropping even harder because of Elon Musk selling, because of Twitter, because of the bad headlines and etc. A bunch of different things at once. And now Tesla's in a position where we're gaining back strength. The price price ratio is going up. Tesla has more strength than SPY as of right now. But you have to remember the previous trends. Even when Tesla was like pumping so hard, like look at this instance right here. This was back in, let me see, like the very beginning of April. Tesla was way stronger than SPY. It looked like it was going to go to all time highs. It was going to just kill it. Instead, both of them came down together because when the market comes down, the whole market comes down. If that happens, it could still drag Tesla down. Elon Musk himself said that. Okay, so be very, very careful. If you look at the QQQ comparison, once again, very similar trend right here. Tesla tends to be correlated with the market. So, what do I think is going to happen? I am not saying Tesla's going to crash. I'm not saying that. What I'm saying is, I do believe Tesla has potential to push up. If we break this 160 to 161.5 area, we could fly to about 165. It could happen. And I also want to note that in my previous video, I mentioned two very key resistance levels. Firstly, if Tesla broke past 146, then we had 150. We actually gapped above that. And if we broke above that, then we have 155. Well, notice how the 155 to 160 range is where Tesla was trading in. Previous resistance becomes support. And that's like awesome to see Tesla holding it up. But there are some technical indicators that make me a little bit concerned. Okay? The way Tesla moves tomorrow depends on PCE. We could actually get a pop if we break 161.5. We do have the potential to push to 165, but I would still be very careful about like the next couple of weeks. That's because we have the FOMC meeting next week. The market might not do as well as some people think. I know so many people think that I'm crazy if I say this, but the market is still showing signs of bearish divergences and they're not actually getting weaker, they're getting stronger. Look at how SPY is pushing up so hard, yet the RSI is not telling us the same story. We are not pumping the way we used to. It's more like we have this hidden bearish divergence showing on the RSI, meaning that we could be forming a top here, and the market could actually come down pretty hard soon, right? And if you want to convince me that that's not going to happen, well, if we break and hold 410, if we break and hold it, then yes, we could continue to fly. I will admit it. But as of right now, the divergences still exist, and it looks like we're going to be establishing a lower high, compared to like December, maybe between 402 to 406, maybe a little bit higher, somewhere around this zone. I believe we're going to make a top, then we're going to trade sideways, and there might be some black swan event that causes this whole rally to reverse. That's what I am seeing from a technical standpoint. And once again, in order to change my mind, we have to break and hold 410. So far, it hasn't done that, right? So I still stand by that. I do believe we're going to establish a new top soon, very, very soon. And then the whole market can start reversing. Is it going to start tomorrow? I don't know for sure, but I do want to note that on the daily chart, if you look at the first day of December, this is when PCE came out. PCE was actually a beat. We did better than expected. Inflation was lower than expected, and yet the market ended up causing and forming a downtrend, right? So sometimes unexpected things could happen. All right. I just want to note that. So be very careful for tomorrow. It really depends on the data. I believe that the top would most likely be somewhere between 402 to 406. I've been saying that for a while, and we are in that zone. So I don't consider this, and it's not just me saying this, it's also smart money. Smart money does not think that this is the best position to start like buying and buying and buying into like SPY like crazy, for example. So be very careful. We might be forming a top very soon around here. It's not just because of the divergences, but it's also because of the fact that the Nasdaq's head and shoulders, it is actually becoming uh, less, how should I say? There's a little bit less credibility, but it still is there. We have not broken the purple line. It is still technically there. So there is still a possible head and shoulders. We also have a rising wedge-like pattern. Could this reverse soon? The answer is yes. I would still be very careful. On the VIX has a gap here. So what I'm thinking is, because the VIX has a gap, maybe SPY ends up getting a bit of a pump into the morning. Maybe we fill this gap in the morning tomorrow, and then we see this thing pop very, very soon. But as you guys can see, the VIX is at these extreme levels where it has a tendency of bouncing pretty hard. What could cause the market to reverse? The debt ceiling news could play a role. There's also the Fed, Jerome Powell, and other pieces of data. Be very careful with those. Don't forget, we also have big earnings next week, so that can also be a big one. Apple is kind of close to some extremes. I also want to talk about, hold on, the dollar index. It's still between that 100 to 101 zone. It's starting to pop a little bit, but if this thing gets a breakout out of this falling wedge like pattern it's been on, this thing can also cause the markets to come down. I would still be very careful. The 10-year treasury yield is continuing to push up a bit. Once again, it formed a double bottom right here. If this thing continues to fly up, that's going to be a bearish signal for the stock market. So the point I'm making is, look, one last time. Is it possible for us to enter the bull market? Yes, it is still possible. If we break and hold 410 on SPY and we keep flying, Tesla could also keep flying very, very hard. But so far, the technicals, the dollar index, looking at the VIX and a bunch of other things, all of these different levels are making me suggest that we might not actually see the bull market, the true bull market come yet. This whole thing could just be a trap. And Jerome Powell and the Fed, they might give the market a reality check again going into February. So it's more likely, based off the data, based off historical trends that I've shown you guys in this video, that the market might, maybe we hold up, maybe we push up and we stay in this zone a little bit. Maybe SPY goes for that 406 zone I was talking about previously tomorrow. Then we start to trade sideways, maybe come down a little bit. But once we get to like February, during FOMC, we might see the market come down, and that might negatively affect Tesla. All right, that's where I was trying to go with this video. Um, I'm not saying Tesla's going to crash tomorrow. I'm not saying that at all. I think Tesla, depending on PCE, we might still see Tesla show more relative strength. And Tesla might try to fight for this 161.5 level. If it breaks it, 165 is possible. It could actually fly a little bit higher. But I would still be very, very careful because you have to remember Tesla also has a bearish divergence that's forming. If you look at the RSI, look at the RSI in the 1 hour time frame. The RSI is showing a hidden bearish divergence. And then on the daily, the same thing is forming right over here. The RSI is showing that Tesla's getting closer to being oversold on the daily, even though like way back here, it was actually the RSI was way lower at these much different levels, considering the fact that we are pumping right now. This means that there's another divergence and Tesla could reverse soon. Is it because Tesla's bad? No, it's because of the overall market. I'd still be very careful. And the charts are telling me that we also have all these gaps. It's always important to look at the gaps. There's one big, big, huge gap right here. There's another gap right here. There's another one in the 120s. Do they all have to get filled? The answer is no. They don't always get filled, but they typically, in the large majority of the time, they do get filled. And I do believe this one right here might get filled soon over the next like week or two. So I'm just telling everyone to be very, very careful. The Fed is very, very tough and they have a lot of power. Okay. I believe Jerome Powell is most likely going to be hawkish going into FOMC. I believe that the Fed is in no position to start pivoting now. They cannot do that because right now, the GDP is suggesting, I actually have the data here, our GDP is suggesting that the economy is still very strong, the jobs market is still too strong. So the Fed does not like things like this. And the Fed also does not like the market rallying way too hard. Remember when SPY started hitting 400 and the Fed was actually speaking, they weren't in this blackout period? They started saying aggressive things. They do not want the market to pump like this. That's the reason why I believe something is in the works. I believe the charts are suggesting it, and that's why I'm still very, very cautious. Okay? And it's not just me. Once again, it's also smart money thinking the same thing. They're also not very confident right here in terms of their inflows. So be very, very careful. For Tesla for tomorrow, okay, it depends on the data. The data is coming out 1 hour before the market opens. That's the CPI inflationary data for December. I think Tesla's going to get a pop tomorrow. We're gonna fight for 161.5. I'm hoping we could break it and get to 165. Then we might kind of trade sideways and chomp around in this zone for just a little bit of time. But very soon, my warning is the market might start to downturn a bit. It might start to do that. So if it does end up doing that, make sure you watch these support zones. Make sure you watch 161.4 to 161.5 as support if we do break above this, because previous resistance becomes support. Then we have right over here 155, we have 150, 146, all the way down to these levels. If Tesla ends up coming down below 155 to 150 in this zone right here, the odds of us coming all the way down, they go up. So be very careful. I'm not saying it all has to happen in one day. I'm just talking about the future and what the charts are suggesting. I want to be unbiased and just tell the truth. All right. So thank you all for listening. Have an absolutely incredible rest of the day. I do apologize if I made this video a little bit long and if it did shock a lot of you, but the truth is what the truth is. I'm just here to tell you what the charts are telling us. Is Tesla pumping right now? Sure. Could we pump tomorrow? Sure. We could get to 165 tomorrow. But I'm just talking about FOMC and the next week. It's very possible for the market to start coming down. It's very possible that that's what Jerome Powell and the Fed wants. Thank you for listening. Sorry, guys. Have a great day. Tesla to the moon. Because despite all of these hardships, despite all of these contingencies, I'm still very, very bullish on the stock long term. I'm super, super excited for what the long term future has for this company. Thank you so much, and peace out.